Hey, welcome everybody. Thanks for clicking on the video. If you follow this channel, you'll know that I've had this guest on a few times before. It's Eric Weissenen, co-founder of Astrovault. We've talked about DeFi, specifically about Cosmos a bunch of times. We've talked about his platform, but today we're going to talk only about the AXV token, which just launched last month. Hey, Eric, man, thanks for coming on the channel once again. Nice to have you.
Joe, thanks for having me back, brother. Appreciate it.
All right, so you probably know this already. I almost never talk about tokens, but people want to know about tokens. The market's changing. People want to deploy capital into these different tokens. I don't like DEX tokens. We've talked about this before offline. And DeFi tokens in general usually have a big problem. They don't actually reflect the value of their app, even though people look at them like they're stocks. And I don't look at tokens that way. There's lots of unseen forces that affect the price a lot of the time. There's lots of surprises that affect the price. And people like me are usually making very uninformed decisions. We're kind of gambling, kind of speculating, but we're going to really dig into the AXV token. It looks different to me, and we've talked, about the differences offline. And this is an Archway Marketing DAO sponsored video, so hopefully they don't mind me knocking into this token a little bit, just because I want the info to come out. So hopefully you're ready.
Yeah, absolutely. And I very much echo your sentiments about DEX tokens. That's why we built this.
Well, the platform's great. I have a video about the platform. I'll link it down below. But in general, people, if they're like me, they have a little gamble in them. We're always looking for that low cap gem. We want to know which token's going to do what Luna did last cycle, or Matic, or ADA, or AVAX, right? We want to be the first ones to know about it. Information's really hard to get in DeFi on tokens specifically, but you're more than willing to answer these questions. So I think this is going to go over really well. Question number one: you had your token sale last month. What was the average purchase price of the token at that sale?
Average purchase price. Man, so we did 5 rounds. If you guys
Right.
haven't followed Outbid, we do like a weird micro sale. I know you did some content on it. Thank you.
Yep.
But a series of micro sales. The price started at 7.5 cents. It ended at 10.2 cents, which was our listing price. But we did sell a little bit less tokens in the last 2 rounds compared to the first three, where it was a million tokens. So average price probably around 8.8 cents, like so just under nine, I guess.
Okay. And right now, offhand, do you know what the price is of the token?
Last I saw, like 10.5 cents or so, a little bit above listing
A
price.
little bit of love. So okay, so a little bit above, not crazy, crazy volatile out of the gate. And what percent of the overall supply was offered at the sale?
Um, yeah, so it was 0.5% per round, went down a bit. In total, I think we sold like um, over 3 million, less than 4 million tokens out of 200 million possible. So I guess like almost 2%.
2%. Okay, great. All right, we'll go through quick yes or no questions. I like doing this on my channel. I want to give people like just the basics, but we are going to dig deep into this token, first time ever on the channel. And this is not me pumping the price. I actually want to know this stuff because I do own the token, and maybe I want to buy more, or maybe I don't. We'll see. Number one, um, is the token necessary for the platform to function?
To function, no. To grow, yes.
Okay, interesting. And was a percentage of the supply allocated for team such as yourself, insiders, investors?
Yes.
All right. And can I buy the token anywhere except on Astrovault right now?
Right now, only on Astrovault.
Okay. And Astrovault's on Archway. I'll link it down below. It's what's the website for
Uh,
people that haven't visited yet?
Astrovault.io.
Astrovault.io. All right. And it's a pretty sleek looking DEX. I like using it. I was supplying liquidity. I got an airdrop for supplying liquidity because the platform launched before the token, which is great, I think. And let's give some context. I want to be fair to the platform. I don't want to only talk about the token, but Astrovault, for people that don't know, Astrovault's a DEX. It's on Archway. It launched without a token, like I said, and it generates a good amount of revenue by comparison compared to these other models that are out there. And the way I understand it is the reason why you need the token to grow is because it serves a governance, important governance function. Is that right?
No, the reason we need the token to grow is to provide incentives. We earn from our volume more than anyone else. We are the only ones to earn from liquidity. Like, as far as I know, we're the first DeFi protocol to monetize liquidity. But the caveat is, if we didn't have a token, if we weren't relaying these incentives, then nobody would come in and provide liquidity for us to earn from. If we reorganize it and took whatever we earned and gave it out without a token, then we'd run into hiccups where we couldn't have like loss leader pools, things like stable pools and whatnot that isn't really monetizable liquidity. So it makes things run a lot more sleek.
Very general question. How does the token accrue value? Right? You had the platform before the token, now there's the token. What's going to make it go up?
Yeah. So one, we own an ever-growing basket of treasury. We A lot of people have finally started talking about protocol-owned liquidity, the idea of getting assets under management, the idea of getting a spreadsheet and trying to negate or grow your own assets, if you will. Um, but that's always been done in kind of like a cronyistic, like weird way because nobody's had revenue. Like it's kind of this like untalked about thing that we've been trying to broadcast since the last bull market. Like, hey, these things have $10 billion valuations. They don't make money. They're science fair projects.
Mhm.
We do, and so we wanted to launch the platform before the token just to showcase like here's actual numbers, here's actual revenue with zero expense. I'll classify emissions as expense, even though realistically expense is probably lower than that. But we can actually identify those numbers. We made $16,100 last week in revenue as a tiny little DEX. Nobody else is pulling those kinds of numbers. So yeah, how we accrue value. One, we own a basket of assets. We own Arch, Jackal, USDC, Bitcoin, Ethereum, and we keep earning more and more of all of these assets. Two, we have codified buy pressure. As you come and trade on Astrovault, not only does it grow our assets, but a lot of the trade fees go directly to buy back and burn AXV. So it's like, oh, it's a farm token, they'll sell it. Sure, but as they sell it, not only do the like dividends from farms go up, so we could talk about farms in a little bit,
Mhm.
but also the more tokens get bought back and burned. It's actually a supply sink if the price goes down. So we have kind of definitive theoretical floors, but also we can't go to zero because if anybody trades, you'd buy back infinite tokens. There's not infinite.
You have a growing treasury as the platform earns money in all these different tokens that you're hosting, right? You have pools, the pools make money, and then you have this buying back mechanism of the token. Is the token itself, the price, theoretically, is it correlated to how much you're making or how much liquidity you're hosting in those other tokens, or is it not directly related?
It It should be correlated. Our token's been out for 1 week at this point,
Mhm.
at recording this. But yes, there should be correlation from direct cause and effect, but at the same time, speculation will do whatever speculation does.
You've been talking about the model for a while, right? A long time. You launch it, it works. You're able to get buy-in from these other teams, right? You own liquidity, or the platform owns liquidity. Now you've got the token. Is the token the last piece that makes it all fit together, or is there something else coming?
Both. Yes, the
Both.
token is the last piece to make everything flow, to make everything work. That being said, it would have been the last piece even if we didn't have things like Outbid driving in a bunch of protocol-owned liquidity. We've got a lot more really cool things in the works. As we grow, our belief is decentralized business. As we earn Jackal tokens, as we earn Arch tokens, as we earn Atom, like it's our duty and responsibility as investors in them to help make them succeed. So we're working on a lot of other really neat things that you wouldn't associate with a DEX, things that you haven't seen in crypto before.
Mhm.
That will be value adds to our partners, and in doing so, bring like not only be good for our basket of treasury that if that goes up, theoretically we own more AUM, but also drives value back to us because a lot of it will tie into other parts of Astrovault to function to grow their decentralized businesses.
A little bit about the tokenomics. You said that there was a supply sink built in to the trading activity. What's the emissions? Let's say just for 2024.
Mm.
Or maybe we should start this way. What percent of the supply is actually in circulation right now?
About about 7%.
7%. And there's 200 million tokens, or was it 200 billion tokens? 200 million.
Mhm.
Okay, so it's about 14 million tokens are in the supply at the end of 2024 or 1 year from the launch, about how many tokens are going to be in circulation, or is that going to be dependent on the burning?
So it's somewhat dependent on the burning. It's
Mhm.
more so dependent on how well we're scaling. We do a lot of things differently. We're not super impressed with what's been built. We came at everything from a first perspectives approach.
Wait, I know what you're going to say. You're going to say you didn't plan out the inflation 10 years ahead of time.
That's
You didn't lock in a number for inflation for the next 10 years. Is that what you're going to say?
yes and no.
Okay, okay.
So we kind of do like a dome and city model. We have a fixed minting rate. That is exactly how many tokens will be minted, how much the total supply will grow. Circulating is a dynamic function based on how well we're scaling. If you
Okay.
look at things that have like, oh, well, we have a thirdening every 6 years or something, and at that point, eventually we have no inflation. We're just fully sustainable. We'll have zero expenses as a protocol. Like that doesn't make sense. You're not going to see the U.S. just stop printing dollars because you're not going to have fire stations or police anymore. Like the purpose of printing tokens, the purpose of printing money is to decentralize costs. We're going to have costs in 20 years because we're still going to be operating. It's a matter of how we can kind of optimize those. So we have a fixed emissions of 100 million tokens a year. Right now, only 13% of emissions can be circulating, and
What
less than that will be.
what happens to the rest of it then?
So right now, as of this week, and it kind of fluctuates week to week, 72% of emissions go to the community pool. Community pool already has 80 million tokens, and the foundation governs a lot of the rest of them. If you guys want to burn 100, like half of the total supply, you can. But ideally, we can use it to kind of grow and scale into other ecosystems, do airdrops for bootstrapped POL as we grow. But again, it's up to the DAO. Most of the tokens are owned by the DAO. So the 200 million ceiling number is kind of misleading. But 72% of inflation goes to the community pool right now. 10% goes to the ecosystem grants pool, which already has like 10 million tokens. 5% goes to the ecosystem liquidity pool, which is used for liquidity deals. Only 10% is going to LPs, 1.5% to stakers in the AXV farm, and 1.5% to Gravitate, which is how we give incentives to our traders.
The tokens out there, people either bought it or they got airdrop tokens for being early participants on the platform, supplying the liquidity that was not incentivized, right? It was just you believe in the model, you can LP, you're going to get this airdrop, and now you're part of the platform really with this token. So you can buy it and just hold it. You can buy it and you could LP it, right? You can buy it and stake it, but you don't call it staking. They're called farms, right? Because it's not a layer one token. So it's you could stake it. It's in the platform. It's under farms, and you could earn three different tokens. You get to choose, right? You get to choose your reward token. How does that work?
Yeah, so we're earning over $200,000 a year worth of Arch. We're earning over $200,000 a year worth of Jackal, and that's with zero volume. That's from us being the first ones to monetize our liquidity. That's just opportunity costs that other dexes aren't tapping into for how we do DApp specific staking derivatives. And we're taking 20% of that revenue and we're diverting it to our token stakers through this farm. So that means now only 80% of what's earned goes to protocol owned liquidity. But now, yes, you can stake AXV to earn Arch without having to own any Arch, without having any risk of impermanent loss, and without having a 21-day unbonding period. It just showcase we're trying to show people that like we do have legitimate revenue and you can tap into some of it, like where you can stake to earn Jackal, you can stake to earn Arch in ways that people haven't had before because nobody else has had that revenue. Any dexes that have this kind of thing, it's always a voluntary contribution from a listing fee. This isn't. We've had none. We're just earning that much where a 20% revenue share is really high for a while, higher than staking the native layer one asset. And if the price of AXV goes down to 5 cents, then the APRs for those farms will double because it's not affecting what our actual revenue is.
Got it. Right. So I've heard you say before that that the DEX earns revenue just by hosting the liquidity.
Mhm.
I think that when you look at data on any DeFi app, the first thing that comes up is TVL. That leads you to believe that just having TVL earns some type of revenue for the platform. but that's not necessarily the case. In fact, it looks like TVL gets diluted by inflation in most cases. How are you guys exactly earning from the liquidity that you host?
Yeah. So if you go on, say, Osmosis and you want to look at like an Atom Osmo pair, it's Atom and it's Osmo that's held there. On Astrovault, you'll see something like an X Atom, X Arch pair instead of
Mhm.
just Atom and Arch. What the X tokens represent is our own staking derivatives. And people are like, oh, so I can hold X Atom and earn Atom? No, you would only hold the X Atom so that you could LP and so that you can earn APR. Every other farm gives you tokens for their liquidity. They earn nothing from their TVL. What we're saying is that the bulk of our liquidity will be staked, and the staking rewards from that liquidity go to our DAO.
Right.
This is actually exactly what Coinbase does too.
I was going to say centralized exchanges do something like this, and that's why sometimes you can't off ramp tokens. They're
Yeah.
waiting for those rewards to hit before they cash you out because they might have a little bit more staked and not enough available. And that's also why they pay out less of a slightly less of a staking reward compared to what you would get if you did it in your own wallet, right?
Well, yeah, and they take a vig, but like you said, they stake more of your funds than they tell you they're staking of your funds.
Of course, yeah.
Back when Uniswap was created, they're like, "Oh, we're going to take Coinbase, we're going to put it on chain. We need liquidity to work. Why would people give us liquidity? Coinbase is earning trade fees. Let's take these trade fees, give it to LPs, and boom! All right, cool. Liquidity came, it worked. Oh crap! We just copied a platform and gave away the revenue. We don't have any revenue anymore.
Mhm.
Let's launch a token." That's literally what's been created. Coinbase has adapted. Coinbase is charging less for proof of stake tokens. They have entire sections of their team dedicated to running infrastructure. They're earning so much money from Ethereum staking. They're like the number 2 provider. They're earning so
Mhm.
much money from Atom staking rewards that like trading fees are almost a secondary in some of their different pairs. They
Yeah,
just need to keep enough liquid to process withdrawals. We are the
right.
first ones to do that in DeFi.
Great. All right. You mentioned that that revenue goes to the DAO.
Mhm.
AXV is the DAO token, right?
Yeah.
It's not only used for incentives, it's also the DAO token. You said that people can just put up a proposal, vote to, let's say, burn half the community pool. What are some realistically cool things that you expect to see or that you would like to see put up to vote by just holders like me?
Yeah, I'd love to see more sub DAOs come up. We're a small
Mm.
team. We're completely bootstrapped. Again, we built this all by ourselves. We would love more people to come and be like, "Hey, we want a treasury management DAO. You guys have all this like weird treasury type stuff. Maybe like some better kind of hypothecation could earn more money. Great, or give better insight and analysis into like how much we're earning week to week, how we could better optimize that. What where if or how we're overspending on some pools compared to others to maximize earnings." That would be fantastic. We'd love to see marketing DAO type stuff set up. But also, in most DAOs, you could do spend proposals. Here, you could be like, okay, I'm going to do a spend proposal for $20,000. I want it paid in Arch. I want 600 paid in USDC and 2,000 paid in Atom. It doesn't have to be the AXV token because we own so much else.
Right. So most treasuries around the Cosmos ecosystem, it's generally just one token, unless they've done some token swap.
Mhm.
How many different tokens off the top of your head make up this treasury that the AXV DAO has control over?
Top of
Is
my head,
is it
15, 20, and it's ever growing.
Oh, wow, okay. All right. So it's naturally being diversified, plus inflation is feeding the pool, um, and the holders of this token just need to come up with some good ideas to just optimize what's what's sitting there. That's what it sounds like. Because a lot of it is a lot of it just sitting there, or is a lot of it in the derivative form? Like you said, you're earning an atom. Is it going into the treasury as X atom or actual atom?
So it goes into the treasury as Atom, and it goes directly as protocol owned liquidity. So we basically take what we're earning in Atom and we usually add it to the Atom X Atom pair. Again, like
Mm,
Coinbase, they need to leave enough liquid to process withdrawals.
mhm.
Those stable pools of ours are how we keep enough liquid to process withdrawals. And so we're hoping to grow those and make sure we can maintain those over time because those should not be competitive with staking rewards. Right now, we have a ton of Atom X Atom in that pool. We don't need any more help. So what we've been doing with Atom is adding it to the XArch XAtom pool. I think right now the community pool or the protocol owned liquidity owns like 90% of that pool, which means
Got it.
all of the rewards that are going there are just automatically burned. We burned 24.6% of the incentives we gave out to LPs this last week.
Two more big questions that maybe will help you just kind of go deeper into the token. Uh, what partnerships, integrations exist out there? You're not a layer one. You're an app on a layer one that would make the token more appealing or just cause it to be more in demand across the ecosystem.
Yeah, so we've strategically chosen not to build our own layer one, whereas everyone else in Cosmos does. In general, they're expensive; they don't make more revenue, and we feel like it would hurt our ability to make more partnerships. Whereas DApps are trying to get their own or chains are trying to get their own TVL. Chains are trying to bootstrap their own ecosystems. With our model, we're trying to tell everyone we can be your chain's native DEX. Everybody wants one; they all suck. Um, if you want a good professional competitive DEX, I mean, we have the best model, like by a lot. Uh, then we can be your chain's native DEX and interoperate with everybody else. You can bootstrap liquidity and keep showing it to your investors as TVL on your chain. We're not trying to siphon away. We're not trying to extract value. We're trying to maximize your value because we're literally invested in you guys. To function cross chain, we're doing it in a way nobody else has done. You'll be able to use multiple blockchains at the exact same time, not a drop down. Oh, let's use Astrovault on Archway. Now let's use Astrovault on Neutron. Now let's use Astrovault on Stargaze. Like, no, we have permit managers. You will be viewing and operating all of the different chains at the same time under the same UI, and all cross chain trading will have to route through AXV, which functions kind of like CCTP does. So it's needed. Additionally, like you guys see the farms now, we're going to roll out a ton more farms. All of these farms are going to have governance control in the L1. It's going to get really weird if, a prop goes up on Archway and it's like overwhelmingly no, and the AXV DAO is overwhelmingly yes, and we sway the vote a decent amount. And people realize, like, oh, they have a lot of governance power and they're growing governance power. And if I have AXV, not only do I have that governance power at Archway, I also have that governance power in Juno, in Atom, in every other layer one. As people start seeing that you're probably going to have higher governance power per capita than you do with the L1 tokens, we get to throw ourselves in the drama, and there's like that. There's a lot of value capture in that.
All right, last question. Last question. You're an app on Archway. You're looking to deploy elsewhere to be the premium DEX on some other chains. What does Archway or what can Archway do to kind of nurture you guys as the main DeFi hub DEX on Archway so that you can be successful elsewhere?
That's a great question. I think just like our model and our biz dev, our relationships will help us be able to succeed multiple places. We get asked a lot, like, "Oh, well, which one's going to be your home? Where's your focus going to be?" And frankly, like we're ambivalent. It's really whatever you pour in, you get out. Right now, the Archway Foundation is doing a fantastic job nurturing liquidity relationships, help seeding liquidity deals. That if they have more liquidity on the Archway version than we get on other deployments, then proportionately more of the AXV tokens are going to be earned on the Archway version.
Right.
More emissions will be there. More of the staking contracts, say, will be there. Maybe more outbid raises go there. Compared to elsewhere. If they're not leaning into it, if we don't have as much liquidity there as we have in other versions, as far as we're concerned, all deployments of Astrovault are just Astrovault. And it happens pretty organically where the tokens end up being minted, and how much goes to different pools. And as we potentially list new partners and set up new liquidity deals, it's really up to them where they choose to deploy their liquidity. And if Archway is more attractive than other ecosystems, more will choose there. If there's more available, if they co-incentivize different things, then great. Otherwise, we're just hoping it's on Astrovault. We want to support all of our partners as much as possible. Obviously, we do have close ties with Archway. I
Mhm.
was on the team for a while. We do really enjoy working with them. We foresee it being a really solid symbiotic relationship, and this being a way of better integrating them with other existing and newer ecosystems because of the liquidity they've already been able to build up and the other integrations that will have take place in their ecosystem.
Great. All right. Well, I think this video is definitely going to kind of paint the picture for people looking for not just a speculative position on a DeFi token and just hope it pumps one day, or hope it pumps and they sell it when it actually is pumping. A lot of information. I'm definitely going to watch this closely. Like I said, I took part in that launch. I got an airdrop. I'm not going to say what else I'm going to do, but I really appreciate it, man. You gave a lot of great info. A lot of people wouldn't sit down and have so many specifics about their token. So thank you so much.
Thank you. And yeah, if you guys have any questions about the numbers, if you guys want to compare, contrast us to other places, please go to other dexes and ask them how much they're making in revenue and ask how much of that is revenue for them and how much is elsewhere. We're
Mm.
transparent. Right now, our market cap is underneath our assets under management. Right now, we're earning at a rate of over $800,000 a year, and it's going up pretty quick month over month as we get more volume and more listings. So, we are going to keep doing everything we can to keep growing. Uh, Nothing we ever say is financial advice, but we're going to build something that grows and scales. We're not trying to build a bubble that can pop.